Okay, good morning, everyone. Appreciate you attending our Micro Moment podcast slash covered calls, CSE podcast. You can go to our website, which they're both one and the same now, www.micromomenttrading.com, and see everything we do. Sign up for the free Cal report, which you get every week, every Friday. It's been published now for right at 20 years, maybe slightly over 20 years. And it has emails from all our clients all over the world, and the comments and answers that these gentlemen that you'll see today, if everybody gets here, how they answer them, and it's really a good it's a good report because you can see what's going on. Also on the website, you can sign up and find out all the things we offer, the seminars, the services, and what they cost, and so on and so forth. And that's www.micromomenttrading.com. Now, Mike is on here, and Tim will be showing up shortly. Randy had an appointment. He won't be able to be here today. And I don't know, Keith usually gets here a little later. So we'll see. I had some crooked. See if Keith gets it okay. It was just an absolutely crazy week. It was a good week for us. We didn't have our normal, double-digit returns. We still got one day left. But we're up 8.13% for the week so far, which is doggone good considering the market. Like today, during our first session on micro moment trading, we went into it with a stop from the pre-market, and the circuit breaker clicked, and then I think it went off a couple of times during the course of the seminar, right, Micah?
Once, yeah.
Yeah, and there's Tim. He's there. So it's kind of been a light week for us. We're still up for as of last Friday, which was the end of the 44th week. We're up 4,863.937%, which is average 110.52 a week. And so we're having a great year despite all the problems. So we don't care about the market. If it's up or down, we just want it to go one way or the other. And we're going to take advantage of whichever way it goes.
Yeah.
And so why don't we start off, because we don't have anybody else to start off with. We'll start off here with Mike and Tim. And Micah, why don't you kind of bring up to date how the week's gone and exactly what we do, so the folks that are here for the first time will know. And also, if you're here, you can type in on your keyboard there, and you have the ability to type us a message, and we will address it and take care of it. So anything y'all want to talk about, just let us know. Okay, Mike, why don't you take it off and kind of give us a update?
Yeah, so the week has gone, that's for sure. It's been a very historic week. The market is out of its mind currently, as I'm sure everybody, if you're here, you're aware of that. But micro moment trading is the concept that the market is always going to go up and down, and then back up and then back down. It's off of that, cyclical pattern. And at the start of those moves, sometimes in the middle, but primarily at the start of those moves, on that direction change, there's this burst of momentum, and we hop in and out in less than a minute. So we use, a lot of current week options, sometimes 1 week out, and we just, grab bits of that. Now, it's very different from scalping in the sense that we're not in and out, for fractions of percents. We're still going for, 3 to 5% every time. And we, though our trades are short, we're not, trying to grab those half a cent in between. We actually trade the moves. So it does get confused with scalping a little bit, but I wanted to clarify that because we haven't in a while. But we do trade options. So the spreads right now and the pricing makes it difficult to do so. In a standard market, we've obviously built this technique for a standard market. The trading world is very reactive and very much so, stuck in the mindset of seeing something happen and wanting to try to get into it unprepared. We're seeing a lot of that, all this panic selling is people are going in and out multiple times on the way down and just losing a bunch of money because they get so emotional. If you don't care which way the market goes and you're always in cash, you don't get emotional. You don't care. If you see, 2,000 down on the futures, you don't, start to lose your mind, and you can keep a level head and see what's going on. and you can trade or not trade. We have had quite a few days where we're just not trading because we're looking at 10-15% spreads. That's how much we'd be down if we were to enter, because these spreads are just massive. So we've been taking it easy, but at the end of the day, we're not losing money like most everything is. I have a little have you guys heard of Acorns?
I'm sorry?
Have you heard of Acorns? It's an app where
I'm not familiar with it.
Yeah, it's an app where you just it rounds up. So when you make purchases on your card, it grabs and you pay $1.80 for something, it grabs that 20 cents, puts it in an account, and then moderately invests it for you. Even that is way down, and they are conservative. They try to get like 3% a year. And even that little thing, and I got a couple $100 in there. It literally just saves the 20 cents, 30 cents at a time for you. But that's way down.
Yeah. See, that's still, they're trying to get 3% a year, and we're making hundreds and hundreds a year, thousands. And you guys were up over the last couple of days, 8%.
Yep.
It's just incredible.
Yep. Yeah. Exactly. So, everything is reeling. We hit that circuit breaker today, and it kept dropping afterwards, and we consolidated for a little bit, but it just started tanking again. SPY's down $3 from the top already. So,
yeah.
But it just takes all the pressure off. You never need to predict. You never need to, think you're bigger than the market or smarter than the market. You never have to really figure anything out. Micromoment is a very now trading method. You see this is happening currently at this second. It's a lot easier to predict what's going to happen in the next 40 seconds than in the next 40 days.
Yeah. And they're usually through, what they do is they have a morning session, the micromoment trading session in the morning, from when the market opens 8:30 Central Time to usually 9:30 Central Time, 9:45. And they sit there and they explain in detail with our proprietary charting, explain when they create a position, what they're going to buy, what they're going to sell, and you can enter right along with them. You get a text every time they get ready to do, or you see it. You don't even get a text. You can sit there and watch them, and you learn how to do this stuff. They're not doing it for you, but you learn how to do this because you're seeing that chart, and they're going to excruciating detail exactly what's motivating them to do that trade. And then they'll usually do 7, 8, 9 trades a day. And none of them last more than a minute or so. And most of them are less than a minute. And then they're through and they leave. And then sometimes they might come back around noon if there's been a change in the market. And again, they have averaged 110% over the last 44 weeks. As of 44th week was last Friday. Mm-hmm. So you really learn this stuff when you subscribe to their service, and you're seeing them do the trades. And we have an account, a corporate account, that they're both trading, and it's pretty new, but they're trading it. And eventually, probably in a month or so, it'll be audited, and then you'll have an audited track of all their trades and such. You can see that they really are really real trades. And I've been in this business a long, long time. And I can tell you, I've never seen a technique that's so good because, like Mike said, we're not speculating. We're not trying to guess what's going to go up. We're not going to, guess what's going down. And we're certainly not going to lose any money. The whole key to their technique is one rule: how to get out of it if it turns red, and get out of it quick. So maybe you only lose 1 or 2%. Well, you'll make 5 or 6 other trades and make 3 or 4 or 5% trade. So and sometimes more. So it's really just a fantastic technique. Tim, why don't you introduce yourself and kind of bring them up to date?
Absolutely. Hey, everybody. I'm Tim. I'm glad you're here with us. And Micah did, of course, a wonderful explanation of what we do and how we do it. And it just strikes me, if any of you have had any experience as a day trader or no day traders, they may come in with a pile of techniques and charts and predictions and omens and prayers and talisman and whatever else they need. But we don't do that here. We have just a very simple technique, a few guidelines, and we wait for the market to fit our guidelines. And I think that's the main difference is the market always comes around, the conditions always set up, the pattern set up for something that becomes a favorable trade for us. And it happens, many times during the day. And we just trade 1 hour in the morning, which is really all you need to do with this technique, and do quite well with it. But it just struck me this morning, we were talking, and the markets are just historically crazy right now. I've never seen anything like this since, I guess, 2008, where we have such a combination of events that have collided to create the conditions. But here's the thing to keep in mind, and we talk about this a lot in the mornings, is the market has been overpriced for a long time now. We've been on a bull run for 12 years now, basically 8 or 10 to 12 years, whatever it is, very long bull market, and it's way overpriced. It was due for a correction and has been for months, if not years, frankly. So when those prices are so far up, it doesn't take much to spook the market and begin a sell-off, which is what we've seen in the last 2 weeks. What does that mean to us? Nothing. It means absolutely nothing to us. It means that we get more volatility. It means that we get more trades. Because at the end of the day, we're in cash, right? In fact, we're in cash 95% of the time. We're in cash. If we make 5 trades a day that last up to a minute each, we've only actually been trading for 5 minutes. and that's it. And that's all we really need to do to get the kind of returns. What's a challenge for us right now is we have such large spreads. And we're just waiting for the market to kind of settle down. Now, with that said, we've still made money this week. Despite the challenges of the market, we've still made money. And I'm pretty sure no one else has made any money unless they just magically shorted the market 2.5 weeks ago and kept those positions. In this case, they're probably done and retired at this point. But our technique, we just wait for the market to adapt to our technique. And we know that happens multiple times a day. We don't chase the market. We don't chase a leg. We just wait for our patterns to set up. And it's really simple. And, if you look at our record over the past year, which is over 4,000% return, I would dare you to go anywhere in the legal markets and find that kind of return for just such a simple technique. So that's kind of where we're at.
One of the neat things, Tim, and I talk about this all the time, and I send out a little daily news after we have our session about what our returns were, what we own. And I always use this example of $2,000 investment in the account, one-time investment, and then make 6% per week, which is, you guys are up over 8%. We still have 1 day to go. And normally you're in the high double digits for the week. But just 6% per week, $2,000, never put another penny in, and do 1 trade a week. 1 trade a week. And let's say you make 6%, maybe a couple of trades. You make 6% for the week. Over the course of 104 weeks, which is 2 years, you're going to grow that at 6% per week to $800 and some odd $1,000. Now, at that point, you can say, whoa, I'm going to quit doing anything else I was doing. I'm going to do this. You're going to take out 1 6%er for the week, which is going to be out $50, $60, $45 or $50,000. That's your payment to yourself. And let the other 3 6ers run and continue to compound. Huge amounts of money. Where this is significant, if you have a kid, and more and more places are talking, forget college is kind of a waste of time for a lot of people, and they even go back to those trade schools because you make a hell of a lot more money as a plumber or electrician or welder than you do as an English teacher. And so instead of going through all that stuff, give your kid $2,000. Let him buy this course. Let him take it, and he'll start trading virtually. He doesn't have to trade real money until he's good at it. And then he'll have something. He can go to any college he wants to. He can go to whatever he wants to do the rest of his life because he's got something he can do for 5 or 10 minutes a day for the rest of his life and make incredible amounts of money. And not going to end up 4 or 5 years later with a $200,000 or $300,000 loan he's trying to pay off and be be in servitude for the rest of his life. $2,000. That's all it takes one time. And you say, well, 6%. That's only $120. Compounding is the key to it. And if you don't realize about compounding, then you just don't realize what's going on. So
yeah, the magic of compounding.
Questions and comments?
Yes, sir. Bring them on.
All right,
Yeah,
here we go.
Morning, Joseph. It was good seeing you this morning. How's it going?
Hey, Peck.
Mike, a few weeks ago, you spoke about a micromoment trading webinar session where you showed the trading platform actions. I couldn't find it. Could you post the link to that in Facebook or LinkedIn? Yeah, I can go on our YouTube and find it. Let me talk to Sue-Ann, our lady behind the curtain, and she handles a lot of that stuff, so I'll ask her. Does the charting show volume? Is volume important in this trading? It does show volume in a different way. It shows volume on what we call E4, which is a volume oscillator. We talked a lot about that today. It's volume increase and decrease from the perspective of buyers and sellers. So it's just like, a standard volume bar, except it goes above and below a zero line when there are, surplus of buyers and sellers. And obviously there's a lot more to it, but we do have that.
Yeah, we also see expansion in the Bollinger Bands. We can see influxes of volume come in when we see expansion on the Bollinger Bands, and also a tightening as well is another indicator on our charts.
I think one of the things that, let me just before I forget it, if you go to YouTube, we've got, I don't know how many of the trading sessions we have on there. Now, they're not going to do you any good because they're not not active right then in the real market, but they're recorded of what they do, and you can see exactly and precisely what you're getting into and what they're doing and how they're making the money that they make. And it's really and that's of course that's free, and that's on YouTube. So, but
yeah, check out the stuff on YouTube. There's a lot of useful video there that demonstrates the technique. And I know Micah regularly posts sections and winners. So good information as that channel grows. Brian, Joe, when and how can I get a statement for the fund?
Okay, Brian, probably in a couple of months, just simply because we just started trading it, and I haven't gotten with the accountants or who's going to be doing the audits for the fund, and that's going to dictate the statement. So I'd say probably that'll be a couple of months, and I'll be glad to get your statement. Anybody who wants a statement, they can have it. It'll show, it'll show an audited, picture of the account and show that those returns are real. But I don't have it right now because I haven't, nobody's got back to me, tell me exactly how often it's going to be a monthly audit, a semi-annual audit, a yearly audit, what it's going to be. And that's going to dictate what the statement looks like. But no problem at all. Yeah, glad to get it back to you.
Yeah, we're still working on some things along those lines. And Peter, do both Mike and Tim trade the corporate account? How do you decide whose turn it is? It's a great question. We do both trade the corporate account. We have our own separate access to the account, so we can trade simultaneously.
Yep. There's moments where, like Tim's gaining certain access. There's a lot of like back office paperwork, all that stuff. So there's certain days where he doesn't have access. He has to trade his own account, or there's something going on. We've run into all sorts of platform problems that we're actively solving as we go.
Yeah.
So yeah, it's just the mess of a statement right now would be that, not all the trades are on it, and it's just, there's a lot going on, the inner workings of the actual, there's a lot of legal and paperwork stuff for that. So we'll
let me take this one from Brian. Brian says, I am subscribed to the charting and have been up over 50% per day, paper trading for the last 7 days. So he's making lots of money. Let me tell you something, Brian, you're working too hard. 50% today is too damn hard. You got to quit working so hard. Maybe settle down to 5 or 10% per day. But that's fantastic. I'm proud of you. That's good. It's a good thing you've been paper trading for the last few days, because the market's really been kind of not great. And obviously everybody knows that. So, yeah.
Yep. Yep.
Okay.
That's awesome. By the way, I love your picture. That's great. That look of surprise.
Yeah.
That's awesome.
Here's John. John, will the fund ever be able to invest in from an outside investor? You guys do a lot better than I. Okay, I got you. Yes, it's been designed for that. It has nobody's money in it now, but ours. And but yeah, we probably will be. We just want to get it going, which it's going, and they're trading it, so it's going, and they're getting these returns. But we want to make sure we get the audit. They have all that, all the ducks in line for that stuff. But it will, yeah, it probably will be, yeah. So here's Deshaun, my buddy, Fort Worth. Deshaun, I wasn't thinking about going off into the weeds, but reinforcing obey the rules. Absolutely, Deshaun. And somebody wrote an email the other day.
I think this is from Peck, or that was from Peck, referring to Deshaun.
Oh, I'm sorry. Okay. And yeah, back to the Deshaun question. Yeah, it's so important to follow the rules. We got this email from a gentleman that said that, he was just so appreciative. He understood. He's followed the rules and not try to get his own thoughts in there. Just follow the rules and just do it. And he's been extremely successful. And when he doesn't do it, he's not successful. So, okay.
Yeah, it's a hard lesson. We most of us have to learn.
Here's Edward. Edward, hello, Joe, Mike, and Tim. Took your advice and I'm using those are our charts, the ISC charts, exclusively, and I'm doing better and more consistent. That's great, Edward. That's
awesome.
Yeah.
Yeah, you had great questions today, Ed. I appreciate you asking those. When you guys use that question box, it's really helpful for everyone. You're not the only one with that question. I guarantee it. So when you ask those questions, we don't know exactly what to focus in on. There's a lot to it, a lot of different skill levels. So we need your guys' help in that question box to really tune into what will help you guys most. And you guys are a part of that process. So thank you, Ed, for asking good questions today.
And this is from Al. Hope this question is appropriate. Do you both use the same broker to handle your trades? Yes. That corporate account is at TradeStation, and they do their trades. Both of them. They have separate. They're corporate accounts, but they have their own individual ones within that trade account. Yeah. It's just amazing. Their seminars, like I say, they don't last long, an hour, and it's 5 days a week, except when the market's closed, obviously. And you can learn so much. And the platform we use, GoToWebinar, you can ask questions. You type in and they answer every question. And you also report your returns, how you're doing. And it's just incredible. I mean, quite frankly, most of our clients do better than we do. Like, the other day, the market was really kind of crummy. We were having Deshaun just making all kinds of money on SPY. And Deshaun was one that heard his name a while ago. And QQQ index. Apple's one of the few stocks that we use because we don't have to worry about stocks going out of business or reporting earnings or anything. So most of them are indexed, but we do have some stocks, and but they're big ones like Apple. And what's another one? MMM is MMM. Yeah. WW. Which is it?
Q.
Well, QQQ. Yeah, which is an index. Yeah.
Oh, you mean a stock? Okay.
Yeah.
I've been recently doing more with Baba, which is Alibaba. Keeping an eye on that. It's a little closer to our sweet spot right now, so I'm keeping that as well. Keeping an eye on that as well.
SPY, which is an index, which is really, really good. A lot of people. I think Sean started off using the SPY, and then it's kind of other people picked up on it.
He seems to have been the master on SPY, and we do IWM occasionally. Yeah.
And on Friday, we have what is it, Mike? A Friendly Friday? What is it?
Frankly Friday.
Yeah. We can. You can call in. There's a number there. It doesn't cost you anything, and your little hand goes up next to your name, and we can unmute you, and you can talk, and we can unmute several people at a time, so everybody can talk to each other. And so that's on Friday. So you can, legitimately ask the questions and have a good conversation. And everybody always enjoys the Fridays. So
Awesome, Brian. I did a trade live last week and had 2 winners for 3 and 4 cents. Right on. Wasn't paying attention and hit the buy ask when QQQ spiked big time and bought a 138 call for 338. Lost 230 on a 138 call.
Yep.
Well,
yeah,
it happens in these markets.
Now, when Brian says, it says 2 winners for 3 or 4 cents. 3 or 4 cents. What in the world is that? It's like I tell people all the time. You go to the country club, you walk in, all your golf buddies. You say, "You're not going to believe I made 3 cents today." And they're going to look at you like you're crazy. But that's a huge return. 4 cents is typically going to be 3 or 4% for that trade, for that moment in time, for that 30 seconds, 4%. And that's
right.
That's a heck of a return. It's not a week. That's not a weekly. It's not a yearly. That's a moment trade. That's why it's called
a single trade.
Yeah.
Yeah, and if and obviously if you did 100 contracts, you just pocketed $300.
Yep.
So, minus your commissions, which I hope you're all, calling your platforms and requesting lower fees or commissions.
Yeah. What? I'll just say I get to that question. What Tim was talking about. All the firms now are commission free. Even the big Wall Street firms, Merrill Lynch, and all those guys are commission free. And Al wanted to know if Sue Ann still handles all the subscriptions and everything for the services. Yes, she does. And so just contact her, Sue Ann, at micromomentready.com, and she'll take care of you. Why don't you take Peck? He's your buddy there, Tim.
Yeah, Peck says, I said in the chat this morning on the webinar, this is one of the only services like it I know of that actually allows its clients to talk to each other.
There you go.
True. It says a huge amount about the reality of their service and their honesty. Peck, that's a great point. First off, thank you for noticing that and picking that up. But yeah, we have a great deal of transparency here. We want to foster community. We want people to talk to each other. We all learn from it, right? Because we're in a big classroom and we're all learning how to do this technique together. And it's nice to be able to have people's insights. We love when someone comes on and goes, I just saw this thing, or I just learned that this happens when I do this. And you can almost see the light bulbs go on or go off on, actually turn on in the community. So, what we do is it's a family. And that's one of the things I love about what we do is because we get to know people and we share our wins and we share our losses because we can all learn from them. And I don't know anywhere else where you can do that, where your clients can actually talk to each other and comment about the service live. So that's a great observation, Pat.
We do better than that, Tim. As you know, we have a couple of seminars, live seminars where you come to Fort Worth. We've had one already, and we kept it small, around 25 people, and it wasn't online because we'd never done one on Micromoment. That was the first one on Micromoment, even though we've been doing it for about 3 years, but as a subscription service only for the last 45 weeks. But we have seminars, and Micah and Tim wasn't with us at the time, but Micah and Tony put on an excellent seminar in downtown Fort Worth. And we always have, naturally, we have a bar after the seminar, and then we go to a hotel and we buy everybody a really nice dinner. And that was a one-day seminar. Then we have another seminar called a master's class where we have 4 people, 2 on Saturday, 2 on Sunday. Everybody comes in on Friday. We have a big cocktail party, fancy cocktail party. And then we have the seminar, 2 people on Sunday, 2 people on Saturday, and that present and, make a presentation. They're not us. We're not doing it. These are people that have excelled in the technique, because there's always something when they're doing it, and it's not us, it's somebody just like you. They can always have some idea of something that they use that meets all the rules and really helps you out. So people really love those. And then we have a great big dinner on Saturday night. So our last thing we have, this is how we got hooked up with Micah. We have a cruise. Could make a couple of cruises a year. And Micah came to the one. We went down through the Caribbean 7 days, all from one end of it to the other. And we'd never met him. He came with his brother. And that's how we met Micah. And he was still in school at the time. Now he's out of school, and he can buy his own beer. But and we've had cruises all in Europe, down in the Mediterranean, a little bit longer than 7 days. And we've had a couple of Hawaiian cruises where we fly out there and then we spend 7 days in the islands. So lots of opportunities to meet and visit with our clients. So I don't know anybody else does all that. So
yeah, that sounds like a lot of fun. I can't wait. Can't wait for another cruise.
Yep.
Yeah, I'm looking forward to it. Let's go.
Probably sing, karaoke on that.
Oh man, I don't know about that.
What makes you
sure live that one down?
Because the one in Fort Worth. Now, from now on, like the one in Fort Worth, it wasn't online. Normally, they're online also, simultaneous. So you don't have to come to Fort Worth, and you can just attend it online. You still pay for it, but you attend it online. And so, here's Brian. Does TDA do less than 50 cents per contract trade?
Yes, they do. One thing that a lot of people don't realize is trading commissions are negotiable. You have to think of everything in just like a store with a product. So TDA is the store, their product is the platform, and the pricing is still subject to capitalism. So,
but that's not a commission. That's called it's another kind of fee, right?
No, the commissions for trades, like option fees.
Oh, I see. Okay.
Yeah, the fees you pay for the options trading is negotiable. So what that is for you is completely dependent on, you being their customer and how valuable of a customer you are. What's your account size? How many trades do you do a day? The more trades in the bigger account, the fewer commissions you're going to pay. So it's a sliding scale. There's no set thing to it. But if you're at 50 cents now, then as you get your account bigger, just call them up and just ask, hey, I would like to get these lowered. And a lot of time they will. We got people paying, as low as 20 cents. I think I even heard of someone recently paying 15 cents a contract.
Wow. It gets more competitive all the time.
What's crazy. Yeah. But what's coming on that is, Joe called it months before it happened that all of the platforms are going to go commission free. And they did on all stock transactions. So if you trade stocks, you're not paying commissions anymore. The way I compared it was like storage. You used to buy, 1 gigabyte at a time, then it went to 10, 20. Now you can just go and buy a 4 terabyte hard drive like it's no big deal. You can buy a terabyte USB stick. It's unbelievable. So because of the way data works, it's all heading in that direction as it gets more advanced. So we're going to have commission-free options in not long at all. Guaranteed.
The other thing about this technique that's so cool is, you always hear about, margin and getting leverage. And then people, get a margin account and the broker's only going to lend you 50% of what you're buying, 50% value, which means you're on the hook for the other half. It's a loan. And you get in bad trouble sometimes. All kinds of terrible things happen. And it's really bad if you're doing options. You don't need a loan. You don't need that to get much better leverage than 50%. You can get, 85, 90% leverage, or even get by doing leaps, which is an option, and it just replaces the stock. And you can do anything with it that you can do with the stock. As a result, these transactions that these gentlemen are doing, they're tying up tons and tons and tons of contracts, which is 100 share per contract, 100 shares a stock per contract. But it's all options. Options are acting for the stock. As a result, they've got 90 and above leverage without the use of margin whatsoever. So their money goes a long way, absolutely a long way.
Yeah, it's absolutely the best leveraged instrument you can have. To control, for $1, controlling 100 shares of a stock, it's just amazing. So from James, is a triple Q strike price of 6 or 7 deep in the money too deep to trade if its bid and ask spread is ideal at 99 and 102? Heck no. If you can find spreads at that, absolutely. It's relational. If you trade down at a 16 delta or an 80 delta, the movement is per value is relative. I think it's safer to go at the higher end, go that deep in the money if you can afford it. You can cut back on your contract size, save some money in fees as well, but you are going to get larger moves in the price. You're going to get larger fluctuations in the price. I'm doing the same thing. I'm often deep in the money. I feel safer there, right? So yeah, absolutely. I mean, if you're finding spreads there and you can afford that price, absolutely.
And this is for a standard market.
Yes.
Just like as a disclaimer, the last 2 weeks and probably the following 2 to 3 weeks, everything we say about price, delta, in the money, out the money, anything like that is going to be, in reference of right now in this craziness is what we're talking about, but is not standard issue. Nothing about the pricing right now is standard issue. So just keep that in mind. Especially if because I saw a little attendee jump on our webinar. I saw that, some people had joined up, and I made it very clear to them. I was like, if you're here because you see this crazy market fluctuation and this is why you're here and this is what you think trading is, you're sorely mistaken, and be extremely careful, because with that mindset, you can lose a lot very quickly because you're launching into a market like this with no trading experience. This is the most extreme ever. We were at the highest prices, all-time highs, Dow, IWM, SPY, Q, everything was at all-time highs. The most extreme movement we've ever seen. If you're just learning in this, be very aware that this is not standard, and you have to protect yourself against that and not get cocky. Because if you get caught in some sort of basic principle that leads to a major reversal, you don't even have time to get out of it. So be very careful, guys.
Yeah, and let me say this too about our other services. Randy's not here today. Normally he's here, but he does our more traditional covered calls. That's where you buy stock or you buy leap and you rent it on a monthly basis. You don't do all this in and out stuff. You're not into something for just 15 seconds and out at the end of the day and have all your cash back. You buy stock and then you rent it. And the key to the whole technique is in our book, Covered Calls and Leaps of Wealth Option. If the stock goes down, based on what you paid for it, you can still get, let's say, 5% a month, a trade. Now, it used to be a month. Now you can get it a week, 5% a week. Even when it goes down. When it goes up, you can still get your 5% based on the higher price, not what you paid for it, but the higher price. So it's great for more normal trading versus these guys that are in and out and gone for the day. And a lot of people like that. They don't like these really fast trades. All these guys have to do is learn one thing: don't have a loss more than 1 or 2% on a trade. Like they had a loss yesterday. Out of 7 trades, they had 1 losing trade, and it was 0.00277 of 1%. That's fantastic. I mean, that's really good. And normally it's not that good. Normally it's more like 1 or 2%, which is fine. If you're making 15-20% a day, you give up 1%. Nothing wrong with that. So when you go to our website, you see all those other things in the traditional covered call type stuff. Particularly if you like stocks with dividends, we have a technique where you can substantially increase beyond your wildest imagination the equivalent of dividend on your stock. Just keep your stock, collect your dividend, and sell on a monthly basis an out of the money call. That way, if the stock goes up, you get called out. You make a profit on the stock. You make a profit on what you sold, on what you rented it for. And then you go back and buy the stock for cheaper than what you sold it for. Then you should have same stock, same dividend.
Yeah, if you're maintaining a portfolio of longer term investments and you have some things that you can write covered calls for, it's money in your pocket, and it's very safe. So if you have an existing portfolio, do some mining and see what you can write some calls on. It's a wonderful technique. Absolutely wonderful technique.
I mentioned this once, but I always like to harp on it. And with Micah, when Micah went on that cruise, he was only 16 or 17, and now he's 22. So this is exactly what I was talking about. It's exactly. Young people are much more computer literate than Tim and I probably, certainly me.
Probably.
And so they're successful. And when you have now, it didn't used to be this way, but you have fantastic virtual trading platforms where you're not going to lose any money. They give you, you open the account, virtual account, they give you $90,000 or something like that. And you just learn the technique. And when you're successful doing that, it's just like the real thing. When you're successful doing that, then, activate your little $2,000 and become a millionaire in a couple of years, So.
Yeah, it's true. The numbers work out. So
What
just watch.
what I'm really interested to see is when we started this up, we were, it was Tony and I. We hadn't even met yet. Apple was hanging out around $200, and we came out of the gate and had this little like permission cycle almost. Like I remember making trades. I remember I called Joe, and because when he asked me, about the job, he's like, yeah, just, hop on, make, a few percents, hop out. And I started seeing these moves. We had modified the technique a little bit. I started seeing these moves, and I remember calling you, Joe. I don't know if you remember this, but I was like, do I have to get out at 3%, or can I ride it till 7? Do you remember that?
Yeah.
And you're like, what are you talking about? He's like, if the trade's going positive, take like, what? Why would you make your money out of it? So that started this process and technique, and the market was in a really interesting spot at that time. Again, Apple was at around $200. It was actually below 200 when we started trading it, and we trade options. So they're completely derived from the stock, and its pricing, its float, its daily volume, all that goes directly into how the options move. And we were getting just astronomically gorgeous moves. Like the options were moving more than
The underlying stuff.
total than they are now.
Yeah.
Like even though we have probably 12 times the amount of dollar change on the actual symbols, these options were just flying around in the most amazing fashion. And that's when we came out of the gate. We started, realizing, we can do 30% this week. And on those beginning weeks, you should go back and look, Joe. On those beginning weeks, we made 30%, 35, 45, 55, 60.
Yeah.
Until one week we hit 250% in 1 week, because we just had this realization process. 250% in 1 week. So that was at a time when all the pricing was like that. Nothing was overextended. We were still within a range where it could go up or down. Right. We started into that climb then and just started grinding upwards, and brought back the amount of opportunity so much. Now, obviously, we still performed well. We still have like just over 100% average a week. But
110, yeah.
But the opportunity, that's after the opportunity really slowed down. We haven't had a week where we could make 250% since then. I honestly believe that. So we're pushing down so hard now that we're Apple's at 250 from 330 something. So what I'm really interested in is after this all settles out, we're going to have some craziness through the election, earnings season. Little side note, guys, keep in mind, earnings season is coming up in April, and nobody's going to hit. So just something to think about. Anyways.
But do we matter? Does it matter to us?
No, it just brings more volatility in April.
Yeah.
But nobody's going to hit earnings in April. But we'll be at this spot after, when it all finally settles down, where we're going to be right around where we started. Mm-hmm. Apple's hopefully going to be around that $200 range, and that's what I'm excited for, because it'll be about the same time of year as well. And this stars could align at the perfect timing. We could have a really, really gorgeous 2-3 months there.
Tim, have you noticed, Tim, that Mike is getting much more mature now about his affection for the stocks, where he can actually give one up and let it go and not mull on it, and it drive him insane like Apple.
It's true.
Well, it was a tough breakup, and I know that he had been considering it for a while, and she would kind of lure him back there for a little bit, and
and we could see it. We could all see it. We could see it happening, just like watching the soap opera. And we'd see it fall. We'd see him put up resistance and everything going good, and then she'd say something to him, and he'd start coming back again. He could take one more chance.
Yeah, but I think everyone has to go through that, once with their first love, and then
there you go.
Then you just harden your heart, and and will not be lured back.
Well, we've about done our 45 minutes. Any last questions anybody have? We got plenty of time if you want to ask a question. Okay.
Yeah, we have burst in the middle.
Joseph, do you ever use leaps techniques with puts, or are they always calls?
Both. Absolute. Just you can, and the technique's the same. You're talking about, traditional cover calls. These guys use leaps and puts and they're micro moment trading, but absolutely. Yep.
Mm-hmm.
So, and besides that, Tim and I can attest that you can do this anywhere in the world.
Yes.
Tim does it a lot of time on the beach, and I'm in Puerto Rico. I'm in Puerto Rico right now, and Micah is stranded up in Seattle. They had a movie about that, stranded in Seattle.
Zero for COVID.
Yeah. Some of the best success I had when I got the technique down. I was down in Gulf Shores. We have a place down in Gulf Shores, and I'd take the laptop down on the beach and cover it up, a little cover and trade on the beach. But I had a thing for a long time where I would take off about 10 a.m., make my trades between 9:30 and 10 a.m. And then say, hey guys, I'm done for the day. I'm heading to the beach.
Yeah. And it's really interesting, but Tim can testify to this. When you first start using this technique and you start using real money and you're taking their daily seminar, you really do good. You really do fantastic, and you make a hell of a lot of money. And then something comes along, and all of a sudden it just quits working for you.
Yeah.
And then you have a reawakening, and you come back, and you're back in the groove. Now, what quits working for you is you think you know everything. You get really good. You're making nothing's going wrong. Everything's fine because you're following all the rules. You're following all the rules, and you're making money. But then all of a sudden you become a genius, and you start changing things. And we had a couple of people testify to that last week. And Tim's a good example. He started off just going gangbusters, and all of a sudden he got smart. And it turned out on him, And now he's dumb again. He's back to the technique.
I am dumb again, ladies and gentlemen. Here's kind of the bottom line is just stay teachable. Stay teachable.
Yeah. In fact, we actually realized nearly every single one of our most successful clients did that process. Yeah. Killed it, got too smart, blew up their accounts in some cases, started again, and now they're killing.
Even Sean tells that story all the time.
Yep. And Melissa, I think.
And I knew it was going on because I see him almost daily. Back then, I saw him almost daily, and I could tell. And he said on the seminar the other day, so he told all his friends, all his relatives, he showed them. He was making money hand over fist, just everywhere. And he was telling everybody what a fantastic technique was. And he says, and all of a sudden, it just turned to crap. It just wasn't doing it. And I saw him physically. If you ever seen anybody turn to crap, it's frightening. Anyhow, he physically went through that process, and now he's hugely successful.
Yeah,
following the rules. Yeah,
that's true. That's a good point, Micah. Yeah.
Okay. Any more last minute questions? If not, we'll let everybody go back to work.
Okay.
Thanks. Thank both of y'all, and thanks everybody for attending. Go to our website www.micromomenttrading.com. You can find out all kinds of stuff that we do and what they do, and sign up for the Cal Report, which is free. Okay, see y'all later.
All right, have a great day.
I'll see you in the morning.
Yep. Have a good day.